like I should feel like I should feel like I should feel like I should go. Go. Feel like I should go. Feel like I should feel like I should feel like I should feel like I should go. Feel like I should go. Feel like I should feel like I should feel like I should feel like I should.
GETCRACK. Wake up, motherfucker.
This is a buying opportunity. Mizuho healthcare strategist Jared Holz joins us now. Jared, great to see you. Certainly it's had an enormous pullback. Can you buy their explanation of the inventory sort of fluctuations from quarter to quarter?
Great to see you too. Yeah, I think I do. You know, this is obviously a moving target in such a fluid market, and there are so many things we still don't understand about all of the supply-demand metrics in the market, which drugs are going to be preferred by patients and doctors, how long patients are going to stay on the drug, are they going to be on these chronically, intermittently? So yeah, I think some of the supply commentary from the company makes a lot of sense. I just think there are so many variables that are just not yet understood.
Novo had a big pullback as well. Is there any concern in your mind that there is an issue with demand since, I mean, Novo just closed its deal with Catalent, so it's prepared to produce a lot more vials of the drug?
I don't think so. I mean, it comes up in every conversation, both professionally and personally, around this drug class and how pervasive it is and how many patients are going to either want it or need it or a combination of both. And Novo and Lilly have, I think, invested over $20 billion just this year in manufacturing. So I think we talk about this market as though it's much more mature than it is. But this is, 2024 was really the first year. I think we're just getting started. So I do think the demand is there. I think the one thing that gives me a little bit of pause is how long patients are going to be on the drug for.
Hey, Jared, as this gets approved for more and more and obesity, do you expect insurance numbers to go higher or the amount of coverage, whether it's employee,
cardiac conditions, and maybe even Alzheimer's disease? We get data for that later this year. If the efficacy is decent and the safety, I think, will most likely be a market medical condition. So I think that's a definite. The question is when, and I think as we move forward here, we'll get more evidence of that.
There's a couple, I think, last quarter, David Ricks didn't do a particularly good job explaining things. So I think the average analyst price after today is still just north of $1,000. What's the case, though, Jared, if there is one, with this thing can break down in a meaningful way?
Yeah, what's going on? Yeah, I think the valuation is still the biggest constraint when you talk to investors about their willingness to own it. I think it's trading around 30 times the new 2025 estimates that are going to come out, and north of 25 times 2026, obviously that pales in comparison to where the stock traded a very small variance. But or not they can add to obesity or these cardiometabolic drugs is really just a question of overlap and how the government would look at that. I think as it applies to either an Altimmune, or a bunch of these other much smaller publicly traded companies, it's going to depend on mechanism of action, things that are just much more detailed insofar as how the government would look at it. But I think we'll see what the oral shows. I mean, that data is coming out really soon. If there's any abnormality or inconsistency with the oral drug or for glipron, then maybe they kind of have to dip their toe into another asset there.
Gains after today's cooler than expected inflation data. Our next guest now cautions there could be more downside if tomorrow's CPI report comes in hot. Let's bring in Ed Yardeni of Yardeni Research. Welcome. It's good to see you again.
Thank you, Scott.
Why do you have that view?
Well, look, I think the big issue for the stock market is the bond market. And the bond market, we argued back in August of last year. And here we are, up from 3.65% on September 16th of last year to 4.75% thereabouts now. And so that a lot of that had to do with the better than expected growth of the economy, with the Fed probably going on pause. And we also have some stickiness in the inflation numbers. So I think the markets are going to be focusing on the areas of where inflation seems to be stuck and inflation over the past several months.
To PCE,
yeah,
which certainly is a more important gauge on inflation, at least according to what the Fed watches.
No, you're absolutely right. It's a very good point. I would say that the month-over-month number was better than expected. But when you look at it year over year, you're still seeing an upward trend in the services area. And so, the best of the inflation news is behind us. The Fed may very well be at none and done outlook for the federal funds rate for the rest of the year. And I'm not sure everybody's understood that. Meanwhile, as you said just a while ago, a few minutes ago, with one of your other guests, we're pretty close to 5%. I think there's something magical about that number. I think you'll see some rebalancing out of stocks and into bonds. I think 5% is an awfully attractive rate.
I mean, are you changing your view on the positive? You've been bullish. Are you moving that ball in a different direction as a result of the backup in rates?
Yeah, no, good question. I'm still looking for 7,000 S&P 500 by year end. I still think that the economy is going to be resilient. I still expect that we're in a productivity growth boom, and I think that S&P 500 earnings are going to be $285 a share this year, which I think is probably one of the highest on the street. So I remain very positive on the earnings situation. Maybe it's wishful thinking, but I'm hoping for a buying opportunity. I'm not recommending that anybody sell into this, but if you've got some cash, I would look for an opportunity to buy. But at the same time, I would also recommend buying some bonds at 5%.
I mean, cash is looking pretty good at 5% too.
Absolutely
so
right.
There's competition again. I mean, I guess that's the point that you're making for certain.
Yeah.
But what happened? Maybe once, maybe none. Is that a problem, or does it not matter as long as the economy remains strong?
I think it would happen because the economy remains strong. You know, for the past 3 years, there's been a lot of talk about a recession. I think that's largely behind us. It may come back, of course. But I think interest rates have normalized. I think 4.5% on the 10-year bond yield, maybe plus minus 25 or even 50 basis points, is kind of the range we're going to see for the next few years. And that's what we had before the great financial crisis. So I think it just reflects the fact that the economy is resilient. It's growing at a decent pace. I think it's going to grow at a faster pace because I'm very bullish on productivity. And you put it all together, and you get an economy that's strong with low moderate inflation, and a stock market that moves on earnings, not valuation.
What part of the market do you like the best right now? I mean, we're talking about earnings. We start to get them tomorrow with the banks, for example. What do you like? What don't you like?
I think you could start with the banks. I think the banks will report solid earnings. Loan demand has been picking up. The financial markets have had more volatility, and their traders are pretty good at making money in that kind of environment. I think M&A is starting to pick up. So the banks, the financials, generally speaking, look quite good. We've got more deregulation coming, and a lot of that's going to benefit the banks. The Fed regulator has left and will be replaced by somebody who's like this. So financials for sure. I would say stick with technology. I wouldn't be selling technology. I'd be looking for opportunities maybe to buy some more. Industrials still look fine to me. So really all the sectors that we've been pushing have done quite well, and we're going to maybe overstay our welcome here, but we're going to them, and we would overweight the U.S. relative to foreign portfolios. We would overweight the S&P 500 relative to mid caps. So good earnings. I'm expecting profit margins to go to a record.
We have the minutes of the discount rate meetings of the Federal Reserve. And what we learned, Kelly, was that only 8 of the 12 banks leading into that December meeting requested a cut in the discount rate. That is the board of directors. They meet. This is an indication, perhaps, of where the president of the Federal Reserve Bank wanted them to go. Sometimes they direct them, sometimes they don't. But only 8 of 12 wanted it, which 4 did not. Kansas City, Minneapolis, Dallas, and St. Louis did not request a quarter-point cut in the discount rates. That suggests that 4 of those presidents are a little more hawkish than, or at least their boards are, and perhaps the presidents as well. The discount rate minute said some directors were cautiously optimistic on the outlook. Others, however, said most directors cited uncertainty about potential changes to trade, fiscal, and other government policies as affecting their outlook. Importantly here, 2 of the 4 banks that didn't request the discount rate meeting are headed, Kansas City, headed by Jeff Schmidt, and St. Louis, headed by Alberto Musalem. Both of them have votes this year on the Federal Market Committee. So those 2 guys you can look at as potential staking out a kind of hawkish position or hawkish wing of the FOMC this year. Kelly?
So, Steve, in other words, would the discount rate normally be news, or is this news because you think there's something to read into about the next direction on interest rates?
Yeah, the latter of that, Kelly. Usually, okay, so I'll give you an example. In September, all 12 banks requested a cut in the discount rate. Now, not all requested 50 basis points. For the November meeting, 10 of the 12 did. Now we're down to 8 of the 12. So I think this tells you how, remember when Powell said it was a close call? it was a close call. More banks did not really seem to be on board with that quarter-point cut. And then I think it's also important that both St. Louis and Kansas City, those banks did not request the cut, and they're headed by two guys who have been a little more on the hawkish side in their rhetoric of late.
All right, what's up, guys? It is January 14th, 2025. So if you took my trade from yesterday, you'd be up. Bitcoin shot up 1 hour after I said whatever I said. And if you got in the morning, that's great. You know, you got to anticipate these things. Okay, now we are going to CPI tomorrow. PPI was very soft today. So we had a soft PP, okay? Very soft. If API comes in soft tomorrow, guess what? Market's going to shoot up. And we also have bank earnings starting out with JP Morgan tomorrow. So Jamie Dimon, who is essentially the of the economy, of the government, or I mean, fourth branch of the government. I guess that's what they say, right? Fourth branch of the government, banks, big banks. And I'm going to show this thing here. Okay. I don't know if my internet's kind of laggy today, I guess, with the Wi-Fi. Probably. Well, we'll have to make do. Okay. Let's see. Yes, Bitcoin up here. Very nice. So we had this in the morning, then afternoon, nice pump into the close of the NYSE. So it definitely does have an effect when you look at when the markets open and close. As you can see here, this was during futures on Sunday night, Sunday evening. You had a little rally, then a fallback, then a crash into early morning on Monday. And that's why I took my dip. I decided to trade MSTR. That was the one I told people to do. MSTR. Okay, and you got the tickers at the bottom, so you can go look at the previous stream to see that, what I said. So you can verify if this thing, yeah, my internet is bad. It's not consistent right now. Must be a bad connection. Okay, let me come back. Let me get out and come back to make sure this thing is fixed. I'll play some music while you're waiting. Okay, let's see. I think that's better. Okay, yeah. Must be a bad Wi-Fi connection, handshake or something. Let's see. Let me check. Move my stuff around. That's why they say streaming, they got to use like line connections or something. I'm not going to willingly do that. I haven't used Ethernet in a long ass time. Okay, let's go. All right, MSTR right here. Let's see what we got. Very good movement here on the weekly. We see now daily doesn't look that good. All right, and I took a risk, a gamble when it dropped below 324, right, and got in. So now I've been selling on the way back up. So usually this is what I do. Yeah, it's pretty good music actually. All right, so. You know, I did this in New Year's, okay? I bought it around here. Yeah, again, and then traded it all the way back up to this top level. So I've been selling on the way up, like 1, 2, 3, right? So you see the three lines, 383, 356, 324, whatever. So do it again, like down here, and I sold. Well, I sold immediately in the morning because it shot up like. Well, because I'm using the leverage, okay? MSTZ. So I don't know if you're using options or MSTX. I mean, MSTZ is a short. So yeah, this thing already shot up right away out of the gate. So that was a good time to take profit. So quickly you take one leg. So that's like 13-14%, right? And then go here, right? So another chunk is like 31%, right? Today, I'm gonna save the rest for a potentially getting back up to like maybe 53 or whatever on MSTX. So this is the leverage. So this is 2 times the percentage of what you would get if you just trade MSTR. You could use either one. It just depends on how much risk you want to take. And if you're doing options, yeah, you can have MSTR options. But I think last time I was talking with CKJ3, he said like the options on this stock is way too pricey. So I told him like, yeah, you can use the leverage ETF, both long and short. You have the option to use MSTX and MSTZ for the short version, MSTX for the long. Okay. So let's see what we can get tomorrow if we're lucky. If it falls back and everything collapses, then yeah, forget it. It's over. That's the last of that trade. I'll just get out. You know what I mean? So you have to anticipate. I can't guess what's going to happen. All I can do is like trade in between like the events. You know, like here, New Year's, there's nothing, right? And then you got, okay, some economic data comes out here and here. So as long as you get in the point, you get up to that level where you want, and then you say like, okay, there's going to be another economic data. So if right now, every time we got one piece of data, it says, oh, inflation is low. It's going to be low. It shoots up. Then you get 1 or 2 pieces of data. They all say, oh man, inflation is bad. And then this last one on Friday was terrible. The employment data was very hot. And then Monday, there was nothing new there on Monday. It was just a continuation of what happened on Friday. People just got shook out here. But very good opportunity, because this is not the place to short. All right. You want to short at the tops. Okay. We know where the range is. The range has been set already. I don't really care what Bitcoin or the NASDAQ is doing. I just know that these lines set the tops, right? This was the range to play during late November into December, right? So this was during like just before Thanksgiving. So then right here I short, then I go long, then I go short, go long. Now, I didn't play this short. I should have played this short, but I thought I was getting too greedy. And I said like, well, it's almost New Year's now and Christmas, New Year's, so less people are trading. I'm not willing to do it. I got out here with my last long. I should have shorted. That would have been another freaking 30, 40, 50%, or even 100% if I did perfectly held all the way through. I mean, I'm not going to do that. I'm going to take profits if I'm doing that. But after it got down here, we see we have to have a new range, right? We got down to this level, 324.87. And what that line is for MSTR was this line was made all the way back here in March 2000. All right. So we know whatever idiots, I mean, this is probably where John Galt shorted MSTR. As far as I know. But yeah, this was the last time anybody had seen this kind of price on this stock, Michael Saylor's stock, MicroStrategies. And back then he wasn't doing Bitcoin, okay? He was just pumping his stock on other reasons. So now he's doing it again. He's trying to pump his stock, pump his company. He's using Bitcoin to do it. Perfect for us, perfect for trading. I'm not going to say it's a short or a long. I don't care. If there is momentum, I will play. And right now we don't have any. We're just in a range. So just play the range. Play the range. Now, if you think this is going to break out again and get over here, this will require very good CPI data tomorrow. And also on Thursday morning, we will have TSMC. TSMC is going to report. That's going to be the first tech company to report on Thursday. I have no idea what Jamie Dimon and like the JP Morgan and the other banks are going to report tomorrow, but hopefully they'll say good things about the economies, because usually that sets the tone for how the quarter will go, because people want to hear what the banks CEOs have to say about the economy. If they say bad things about it, okay, or if they say something about inflation, no idea. What he says will be important too. So put that in mind. Now, if we get up here, that'll be your next sell. And then you will have to decide very soon in the morning if you want to hold any leftovers for another move up, or you want to wait for a pullback and add. Like, let's say it moves up. Okay, so let me just draw some squiggly lines or something. Let's say it does this, right? It goes back, and then it tests, and then it could do that. It could do that. It's very possible. Or it could just, or we could just completely collapse, okay? And yeah, or we could just go from here and just go all the way down. Like, this is a false breakout. That's the worst thing to happen. You got like something that's about to break out, and you just fall right back down, and then that's over. Then it's end game. I think next week we'll just keep going down until Jerome Powell talks. Only Jerome Powell can save it at that point. But I doubt it. I think we will try to go up into Jerome Powell and the other tech earnings like Netflix, Tesla, Google, all those other guys. So that's a trade to make. And then so the easy ones were done in New Year's. Okay, these were the easy ones. Long, short. That was easy. First 2 weeks. Now the other ones are going to be harder because then there's a lot of talk and news coming out. Because everything else between them, there was no news, right? What news caused this? What news caused that? What news? Nothing. No news. There was no news. It's just noise. Noise from tax selling or other reasons. And we had some minor economic reports. One major one, the employment on Friday, was the major one. And that's what spooked everyone for Monday, because then everybody just decided to sell for some reason. But I'll tell you, if you look at the NASDAQ and the SPY today, so let's look at the SPY. It acted pretty funny. Like, look at this. So I sold. Oh, I also did SMCI too. I'll tell you about that later. But you see, like right away, okay, it pumps on the low PPI data, goes right back down, goes right back up, goes right back down, goes right back up. And guess where we landed? So after all that noise, I mean, you probably could have just traded all this, but I have no clue how you could tell what it was going to do. Like, I really thought like after the morning, it would just go all the way down and just stay down. Like, I didn't expect like midday it would just shoot back up, and then just before 1 hour before close, it would just crash back down, and then 10 minutes before the close, it would just shoot back up. So if you remember, if you guys watched my Sunday special about Gamma and all that, guess what? This is probably because of options. All just because of options. It has nothing to do with reality, nothing to do with data, nothing. It's just people trading options, and they're positioned in these levels, and they just get stuck, right? They're just like, oh, okay, now we're in this box. We're just going to be in this box. That's what it is. And the way it landed at 580, near 580 SPY, is the max pain for this week. This week we will have options expiration, and it wants to stay close to 580 on the SPY. And for the QQQ, it wants to stay close to 504. Okay, so it makes sense why like it's moving this way. It's like if it gets too far away from that area, it tries to come back. So tomorrow will be really important. It's the only convincing number tomorrow, with alongside with the data and the earnings tomorrow with the banks, that this thing can break out. Otherwise, we're stuck. We're stuck below 510 on the QQQ, and for the SPY, yeah, it's going to be stuck below 585. There's just, yeah, I don't see it. It has to be really significant for it to push back up through here. If we're lucky and it's good, then yeah, we have another trade all the way back up to like close to 600. I don't think it will make it to 600 though. I think it will get stuck somewhere here in this zone. I think that because this pretty significant area of contention right here. You see this part here on Tuesday. I think this was like this was some data that got released, probably service ISM or something. So you have this red candle here. So getting over here and getting through this zone, because it aligns with these two red candles. See, it's not just this candle, it's that candle too. So let me just draw all this area then. Something like that. I think this is going to be tough. It's going to be really tough to get through without real significant change in the mood of the market. And the only way the market's going to get changed moods, we're going to change the mood is with the bonds, you know. And if we look here, bonds haven't been doing good, haven't been doing good at all for the first couple weeks of the new year. Terrible. So I don't expect much. You know, small caps still down, IWM here, XBI Biotech still down, and here we got Eli Lilly. So that's not helping healthcare. Man, like, yeah, XBI is down like 2.77%. Like, you got hit by Eli Lilly. That PPI did not help any biotech today. So Eli Lilly with this new outlook for the year, I guess. I have no clue why it did pre-earnings like that. So LOY. They said Novo Nordisk also got affected by this. I think all the healthcare stocks, yeah, they all got affected. And another company released pre-release earnings, WGS, the one with the Gene DX, the genetic testing. I was talking about, like, this stock from last year. I was like, this is one of those amazing stocks. And guess what? It was right here. This resistance set in August 2022, trying to break out yesterday, and then today, guess what? It releases news, comes right back. You don't want to see this. You don't want to see a failed breakout. I'm seeing way too many of these failed breakouts. When you see this in a chart, it's like, whoa. It's way too easy for this thing to fall back down here to 37. Okay, so if you're looking to buy this, okay, I'm going to wait for that, see if, like, the CPI tomorrow changes things. But this sector is terrible. Too many stocks look like this right now. Too many. So XBI, like that, see that? That's a failed breakout. And now you're seeing in individual stocks too. Not good. Not good. So WGS, look at that. If something changes, okay, we'll buy. If nothing changes, I ain't playing. Like RX, same thing, right? I was trading this up and down, up and down. Now it's back below here, but I'm not going to play it because that whole sector is poison right now. So every time you look at a stock, you got to look at the sector associated with it. So if I look at biotechs, I got to look at the whole sector. If the sector doesn't look good, it's not good. I'm not taking a big risk on it anymore. Like back here in October, sure. And then, but once you saw this, it's kind of like, yeah, okay, I'll take some risk, but I'm not going to take big risks anymore like I did before to trade them. All right. Okay, so let's look at the quantum computing. I didn't really want to talk about this one today, but as you can see, even though it had a big drop last week of 53%, it's up this week because we actually got a recovery today of 47%. So these guys, yes, they are still alive. So if you were thinking like you're going to short all this thing way back to one, no, you can trade them. This thing is still tradable. Why is it up today? No clue. I think there was just short covering, and I think the PPI helped in the morning, so it caused like panic. So anybody that was trying to short down here, like towards the end of close, they just got burnt. Okay, so these stocks are the quantum computing stocks still good for trading. So if you're a day trader, yeah, you can still do it. QUBT, QBTS, RGTI, IONQ, like these four. Okay, right there. So yeah, you can keep doing that. I don't know if you want to, but let me write them down for you on the chat. RGTI. Yeah, but if you guys are gamblers, yeah, go for it. I mean, they're great for day trading. Definitely, they move fast. So if you catch them at the right time, you can get a quick scalp. You don't need to get the whole thing, you know. You can just get like a few percentage points. And if you're doing options, well, good luck to you. You must have balls of steel. I have no clue what the options market looks like on these things, but they can't be nice. So yeah, you can play those. They're still working for day trades. I'm not going to do them, but yeah, if you feel bored one day and you're like, hey, I'm just going to wake up in the morning or and see if something pops on my screen here. I'll take it, right? So put that on your watch list if you care. Now, we have one earnings. Okay, AEHR, Air, and they do testing. So Air Test Systems, they do testing for semiconductors, specialized semiconductors and such. And as I said, don't play these for earnings. They're nice to play in between earnings. So if you got in at 11, you sold at 18, perfect, because it's been in this range for a while, for the whole year, basically. Yeah, since this whole year. But every time it has earnings, it's like a crapshoot. You never know what's going to happen. It could be up 20% like on October, but now this time it's down negative 27% after earnings. So I don't like to play these for earnings. This company is too wild, fluctuates way too much because it has very few customers. Anytime you have a customer that will mess up their order, yeah, your earnings will just completely collapse. Similar stock with a similar situation as AOI. Yeah, you can play between earnings, but otherwise, yeah, don't play them into earnings. Like sometimes you might get lucky, but sometimes you won't, and you won't like it when you didn't get lucky. Now this one, yeah, I might pull back. I think earnings for this AOI is like February 20th. I don't know. I don't know if it can go all. Let's say the market falls over pretty soon. Yeah, if it gets to 7, maybe it's worth the risk for earnings. But yeah, I wouldn't touch this thing yet because it's a failed move here. Because I thought like, well, if this thing just shot up for the New Year's, then yeah, you could ride it to the next level. This stock used to be $100 stock. I mean, I played it in the 2017 era, like here. Let's see, yeah, January 2017, like 22 to like 80, and I got out. I never touched this damn thing again. I think a lot of people sued this company. But when you have class action lawsuits on a company, you're not gonna get your money back. You're getting pennies on the dollar here, man. So I've been watching it though, because ever since 2022 to 2023, it's been on a tear. You know, it started recovering and you got this nice move, very volatile. So you can swing it around. If this thing gets to 7, yeah, maybe it might be worth it. Yeah, but I don't know if it's gonna drop that far. But it could drop pretty fast on a panic. Because this thing is such a tiny stock, it wouldn't be hard for this thing to just slam all the way down to 7. So keep that in mind. So I'll mention it later. I didn't want to talk about this stock either, but since I was talking about Air, I might as well talk about this one. This has the same issues. So a lot of stocks have these same issues. They're not great for investing. I mean, it might look like it's great for investing if you got in at $2, but who would take that chance to buy something like that? There's a lot of penny stocks out there. Many of them go nowhere for years, you know? So it's rare to see something where you just catch it at the right time. But always look at the chart. Always look at the chart, because once it does something big bump up here, then you take notice, right? You can just get in at 7 and then do your trades within this range. So yeah, if it goes back to 7, maybe it's worth it. All right, so AAOI, maybe you want to check that out. I'll mention it again if I see something interesting. Otherwise, yeah, stay away if you're an investor. Okay, I haven't checked out these guys in a while. I didn't have a good week last week, huh? Okay, yeah, I'm not sold on getting more or buying back or anything here. So I'll look at the EV TOL sector some other time. So this is ACHR. This is one of the stocks in the EVTOL. It's the electric vehicle, like vertical takeoff and landing sector. So it's just a kind of hype stock, kind of meme stock, I think. Yeah, so it doesn't really have much value to me. It's kind of like Vuzi too. Vuzi is another meme stock. Yeah, same structure. It hit like the right away, hit that area resistance and falling right back. So I don't know, if I see something, okay, I might tell you guys to gamble on it, but otherwise, no, I wouldn't. I don't see anything worth it. So I'm just taking the easy trades right now with MSTR, MSTZ. The other one I told you guys about this week was cold. Okay, I took some profits today, this morning. So now it's back. Okay, and I'm not sure if I'm going to add yet. So I'm going to look at nat gas. Cold is short nat gas. So nat gas tried to recover today, and we hit that area. So this area here, this is a spot ETF. I mean, it's not spot ETF. I mean, this is a spot ticker that I just used from TradingView. This is not the futures, okay? So if you look here, back in August 2021, this was during the time when Russia invaded, you know, this area here. So this was before Russia invaded. August 2021. That was a minor high, and you got this minor low here. This was just before the invasion. After in the invasion, you see this pump, right? And then once like everyone got their fill, so commodities always crashes. Commodities love to run up quick, and then once it loses its footing, it just crashes real badly. So right here, when the winter was not bad for Europe, and China had issues with its economy because coal prices started going down, then yeah, natural gas prices also fell with it for the US. So we had mild winters after that as well. So you see here, yeah, mild winters. Now we're seeing more strong winters coming back, right? And also I'm hoping if China can actually do its stimulus, we can get coal prices and energy prices going up for this year. And Trump is in office in a couple weeks, then we'll get our coal and natural gas pipelines going again, and this is what's going to happen. This demand will stay up, but for right now, this has to go back down first. So that's why I'm shorting natural gas right now. But you guys should look at natural gas companies because LNG pumped up. So we had this pullback into December, but right around New Year's, it just went back up. So you see people still are looking at natural gas stocks. So LNG, WMB, EQT, EE, ET, KMI. I told you guys that last year to watch these, and it's not too late to look into them. But what I'm saying now is I would not be buying them now. You would have a better chance to get a better price if you got in December and bought some. Okay, you can hold, but yeah, I think you can find better prices later on if you missed out on some of this move. There's plenty of room, okay, for a lot of these stocks, so you can look at all of them, and I'll mention them again another time. Okay, let me get the LNG. Yeah, it's all in the description. I put them in the description, so yeah, you can look at them here. See, so you can look up, put them in your watch list. But LNG right now today has moved quite well, and I think I'll read a article for you guys. Okay. Let's see, this January 6th, Trump's likely first moves on U.S. energy policy. President-elect Donald Trump has promised to maximize U.S. oil and natural gas production, already at record highs, in part by clearing away what he deems as unnecessary regulation and bureaucracy. Here are some of the energy-related executive orders Trump could announce during his first days in office as he seeks to follow through on that promise. Climate withdrawal, gas export boost. This is important here. So Biden stopped a lot of the construction permits for new terminals to export liquefied natural gas, LNG, okay? Trump has made clear he intends to swiftly lift a memorandum on new liquefied natural gas export permits imposed by President Joe Biden's administration, something his advisors say could happen within hours of his inauguration on January 20th. Biden imposed a freeze in early 2024 to conduct a study on environmental and economic impacts of rising U.S. gas exports, which have boomed since Russia's invasion of Ukraine drove European governments to cut Russian gas imports. The study urged caution in issuing new permits. Trump, however, could wait until after the study's comment period ends on February 18th to protect any permit approvals from court cases. All right. This is big. Okay, let me give you the link for that. You can read the rest of it yourself, but this is why natural gas is my favorite this year. That's my favorite commodity this year. I was pretty bullish last year, but you know, it did not pump right away. It did not pump right away. I mean, people were still thinking that the winter was going to be very mild, and guess what? The East Coast got slammed with nice, cold Arctic blasts. So that's why weather forecast is not easy to do, and that's why natural gas is not a fun thing to trade, in my opinion. But when you get it right, yeah, natural gas moves really nicely. And we got all these companies too that have moved a lot, even before Trump got elected, already anticipating for a good cyclical natural gas bull market, okay, next year. Anyway, that's good. All right, let me see if I got another article. I think let me go over the PPI for you guys. So PPI this morning, factory gate prices in the U.S. increased 0.2% month over month in December 2024, below 0.4% in November, which was the biggest gain in 5 months, and compared to forecasts of 0.3%. Prices of goods went up 0.6%, led by a 9.7% rise in gasoline. Prices for residential electric power, meats, motor vehicles, gas, fuels, and fresh fruits also increased. In contrast, prices for fresh and dry vegetables declined 14.7%. Meanwhile, prices of services were unchanged. This is the key point. Prices of services were unchanged as a 2.2 advance in transportation and warehousing services offset declines in costs for services, less trade, transportation, and warehousing and trade services. Now we see here we are at about 0.2, okay, 0.2 on the PPI. Now let's see how the core was. Meanwhile, core PPI was unchanged. This is a clear one. So we strip out food, we strip out energy. This is what the Fed follows. So we strip those out. There was no change. Forecast expected 0.3%. We had no change. So very bullish on the near term. And if the CPI tomorrow morning is also lower than expected, then yes, it wouldn't be hard to see the market go up. Now let's go to China. China last night had loan demand data. Let's see. China's new loans dropped for first time in 13 years on weak demand. New loans extended by Chinese banks posted their first decline since 2011 last year, underscoring weak demand for financing in the economy plagued by lingering deflation and a housing slump. Financial institutions offered 18.09 trillion yuan, $2.47 trillion of new loans in 2024, according to data released by the People's Bank of China on Tuesday. That compares with a median forecast of 17.87 trillion yuan by economists in a Bloomberg study. It was lower than the previous year's volume of 22.75 trillion yuan, representing the first annual drop in 13 years. Aggregate financing, a broad measure of credit, rose 32.26 trillion yuan, less than the 35.59 trillion yuan recorded in 2023. PBOC figures showed the median forecast was 31.56 trillion yuan. So you can see here, loans drop. All right. So, subdued borrowing demand from the household and corporate sectors drove the declines in credit numbers in 2024, while China's economic momentum improved in recent months on the back of Beijing's stimulus blitz. Its growth prospects this year remain far from upbeat, hobbled by persistent deflation, and with a trade war looming with the U.S., policymakers need to roll out more assertive policies to help domestic demand recover and help absorb any blow to export growth from the expected U.S. tariff hikes. The government has ramped up bond issuance to ease the debt risks of local government, providing a boost to overall credit, and top leaders have promised to cut interest rates and unleash long-term interbank liquidity to encourage lending. Now, so last week, I think on Friday, they said they were gonna stop the bond market. I think the whole Chinese bond market is halted right now, so I have no clue what that's gonna do. But yeah, they gotta stabilize their currency at this point, and this is before Trump even gets in, right? So things could get funny. Okay, now let's look at what the chart says. Okay, let me see. Share screen. Okay. So let's look at Hong Kong today. See what Hong Kong's doing. Because yesterday it actually went up. So okay, this week. So okay, we bounced off the weekly 40 moving average. Not bad, not bad. I don't know. So bad news overnight didn't bother it. So I think we got rid of all the sellers here from this point to this point, from 21,000 to 18.8 thousand here. Okay, good. So does that mean I want to go long on some stuff? I'm not sure yet. I mean, the things that I like is KC, so the cloud computing Chinese stock. KC is just below 10 now. Okay, if I see it go to 7, I could trade that again, go back to 12. Okay, I'm going to watch that. KC is one I'll watch. This is another one that I'm watching, TIGR and FUTU, FUTU. So I'll see if there's anything good there in the coming days to see if I can trade that one. Because eventually, if you get enough bad news on China, you know, you can get a quick scalp. If these things drop, once Trump gets in, you can buy in, make a quick flip in a day or two, you know, because China's going to do a response. Anything that Trump says, China's going to respond right away. And if we look at gold, so last stream I covered a little bit about gold. Gold miner recovered today, very nice. So EXK is my favorite silver miner, and KGC is gold miner. So yeah, it does look pretty bullish right now. I don't know. KGC might break out 5.37% today. So the index, gold mining index, has to get above 36. GDX ETF for the gold miners. So if it gets above 36, 37, we can get back to 41. Yeah, we can make a quick flip into February. Maybe that'll happen. And if you want to use the leverage ETF, you can use GDXU. So I need to see how CPI goes tomorrow, though. Then I'll mention them and add them to the list scrolling at the bottom. Otherwise, yeah, I'm not going to talk about it too much. I think you already know. So, okay, so let's see. What else? Did Intel do anything today? I don't think so. I think the California fire stuff didn't do anything new today on EIX for the utility. No, just up 2%. So I haven't decided if I want to buy more of this yet. But I think most of that fire news is about over. So that could be a good trade. Quick flip on Southern California utility. Because if they say, like, yeah, we weren't the cause of those fires, then it's fine. This thing will just rapidly recover right back up. PCG, Pacific Gas and Electric, same thing. You can buy that because this thing is in Northern California. This is safer than EIX, PCG. This thing can just recover really quickly with the rest of the utility sector. Okay. Let's see what else on the scrolling at the bottom here. Okay, talked about that. Talked about that. Oh yeah, SMCI. I had to talk about this one. Okay, SMCI. Okay, so it hit my resistance this morning, sold at 32. So I bought here yesterday because it was crazy. This drop was insane. This thing was dropping 10%, and I was like, okay, whatever. This is a no-brainer. You can get one here, sell some more, and I have some left over just in case tomorrow CPI is good. I'll see if I'll buy more. If the whole semiconductor stuff is gonna go well, like we'll see if TSMC goes well. So TSMC will report, TSM will report. That's a stock ticker. TSM will report Thursday. If it does that, if it goes well, this will follow the rest of the sectors, okay? With the NASDAQ as well. So SMCI, you can trade that, but I use SMCX, so I get the extra juice. This is 2x leverage, because here it was like, man, that was an easy 50%, right? You get 50%. Now you grab another like 7% here, so for 23%. So like one batch was 15, one batch was 23. I'm gonna hold the rest, see if I can get 30-50% for the leftovers. I don't know, we'll see. And if I'm confident tomorrow morning, then maybe I'll buy back, you know. But it has to be really good. You got to really impress me with the move, because you could get stuck trapped up here, because then it looks like it's about to break the QQQ. So NASDAQ, it might look like it's about to break 515, 515, but it'll just do a false move, and then it'll just come right back down. Then it's like, fuck, we're just stuck. We're just going to be stuck at this 504, because you have to remember, we have max pain at 504. So the option market is basically pressuring it to stay close to here for the NASDAQ. You're going to have to really impress it with TSMC earnings into Friday. That's the only thing you got to worry about, right? Otherwise, you have to wait for next week. And we have Mondays off for MLK Day. So MLK Day knows no trading. So then you have to wait for Tuesday. So you have to take that into account. All right. So everything you do with trading, yeah, you got to take into account everything. Holidays, when data is released, this and that. And then you trade around all the events. Only do it when it's worth getting into. Like here, you see Monday, January 6th, like right away, right? Once it hit that area of 526, we went all the way back down. We just went all the way back down. It's like this gets tiring. It just gets tired, and we just have to fall back. So in any case, let's see what the SPY gives. Yeah. All the S&P has to do is like break through these two areas here. So I drew that rectangle. Let me do it again. So these two red bars here, significant area. So that means 592 to 597. This is where it's gonna fight. I don't know if it can do it. It can just go here and start fighting all day long, but tomorrow, if you're lucky, it can get into here, or it will just drop right away after it gets to 592 or something. Or it can't even do that. It just gets stuck at 585 and goes right back down. So tomorrow morning, you got to pay attention. You got to be sharp. So wake up early, see how the data moves pre-market. Then after the market opens, watch what it does the first 30 minutes. That's it. You got to make your decisions really quickly. What you want to do. Stay with the trade or get out. Or short. Or even short, right? Maybe it'll just like go right down, and it's just better off you just short and go all the way back to, because it could just be so terrible that we could immediately go down to 560 on the SPY. So yeah, you got to make your choices there. So I'll try to come in the morning and tell you guys what's up. Oh yeah, so I better get some sleep, you know. Better get some sleep, guys. Go to sleep early. Get fresh. So if you're gonna be trading tomorrow like a maniac, you know, you gotta be awake for that. I tend not to try to do these things, but since I'm helping out you guys, you might as well learn. You know, even if you're not trading, At least you should watch the charts tomorrow and pay attention, because you might learn something. Yeah, because these times are going to be normal. Sadly, you're not going to have easy days anymore like the last 2 years, and then the COVID years are really ridiculous. I'm telling you. This year is just a prelude for what's going to happen in 2026. 2026 ain't going to be a fun thing. That's for sure. Okay, so better learn how to trade pretty soon. All right, guys, that's 1 hour short video. Very good. I'm done. I'll see you guys tomorrow. Oh, and don't forget to donate to Portia, okay? Portia J with an E. Cash App. And the thing scrolling below, you can get the email for PayPal. Alrighty, see you guys.
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should. Feel like I should go.